Welcome back to the Commercial Real Estate Show. I'm Michael Bull. Today we're talking about apartments, the multifamily market, right? The sweetheart property type in commercial real estate around the U.S. And please welcome my next guest is Sharon Hatfield. She's Senior VP with CFLane. Now, CFLane has about 165 properties, about 32,000 units around the country, and about 15,000 of those units they own themselves, and they have broad experience because they're handling properties from A, B, C, and maybe even a D here and there. And they also develop properties. They have a construction company, so their third-party management, their ownership, they're doing it all. Sharon, thanks for joining us because I know you've been running around the country lately.
Yeah, my pleasure. Thanks for having me.
And I'd like to ask you about tenant traffic to kind of get us started. You know, we hear in some markets that some people are a little concerned, lenders, the Fed, about maybe overbuilding, especially in the A-class communities in some markets. So what are you guys seeing for performance and tenant traffic today?
Yeah. You know, obviously, it depends on the market that we're talking about and the product class. In general, I'd say that we still see everything pretty strong on the conventional side. And, you know, rental rates are still trending upwards. In some markets, we were seeing upwards to 7% rental growth, lease over lease.
Wow.
I would say on an average, you know, we're still around 5 or 6% in most markets, but that tends to be the trend. As far as tenant traffic trends, I still think that, you know, we've got some seasonality in some markets, as we always have, but we are seeing, you know, traffic trends still on the rise. Interestingly enough, we still see a lot of millennials who really want to rent versus own a home. That's creating that dynamic of, you know, desired rentals and people who only want to rent and don't own homes. So I think that's helping and contributing to the drive-in traffic. And I would say we are watching this continue to grow. In some submarkets, we're seeing a little softening here and there, but for the most part, things are still steady, and we're happy and pleased with the results.
Yeah, well, you should be. That's great rental rate growth, especially when you look at it historically. So what about occupancy trends? What are you seeing there?
Yeah, I think most properties we're seeing them hover around 95%, which we're happy with. We have some who are starting to drive higher than that, which is almost unheard of, particularly in the Atlanta market. And our litmus test is when it starts to get over 95, we start watching the pricing, right? It means that prices are too low. So today, we had rather sit and operate at a 94% occupancy and push rent versus sitting at a 98% since the market's really not soft. So it's still steady occupancy too.
Yeah, well, that makes a lot of sense. So now when we bring you an apartment deal and suggest that you're going to see 95% occupancy moving forward, you're not going to say, Michael, there's no way, right?
Exactly.
You can't say it now. Well, and you mentioned raising rents when occupancy gets higher like that. A lot of companies like you guys are using revenue management systems that is interesting. Like, right, it's like the hotels that adjust the rents daily with a lot of input from various places. Are you using revenue management, and how is it working?
Yeah, absolutely. We don't have it in 100% of our portfolio, but we do have it. Majority of the things that we own, we have it there. I'm a big believer in that. I think that it's better to have a revenue management system in place than to not have anything at all, particularly as we're in a very dynamic rental market right now. And I usually, when I talk to investors or clients who are interested in utilizing revenue management system, the rule of thumb is that you usually see a lift on your investment in a couple of years. I think we're seeing that now on every deal that we have because we're pushing rents so aggressively. But, it's only as smart as the people operating it. But we're pretty pleased with all the programs that we have and that we're using.
And the people operating it, what do they need to input to make it work properly?
A lot of market knowledge, obviously, and staying abreast. It does not replace the knowledge of the people that you have on site. So, knowing what's happening down the road is extremely important. One of the software programs looks at current demand, another one doesn't. So if you're using the one that doesn't look at, who walked into the door yesterday, then it's going to take the management team to, be aware of that and know that there's demand driving something, or that, something was built and delivered down the road that's going to affect what historical performance normally would have looked at.
Yeah, I mean, that makes sense when you know what the options are for the tenant without having to kind of manually, I guess, every day go and get that. And I would think another benefit would be when on renewals, when your manager has a relationship with your tenant, and your manager has to raise the rent, he can say, or she can say, oh, the computer says we have to do it, right?
Oh, yeah. Education is everything, and having the team well-versed in how to use it and how to sell it. Fortunately now we're in a good market where the rates that we are offering to renewals are high, or actually maybe a bit lower than what we're offering to people on the street. That actually helps because when you end up having renewal rates higher than what the new lease rents are, then we get into a bidding war with residents. So we're in a good place right now.
That's right. Well, stay tuned. We'll have more on the apartment market right after this message. The Commercial Real Estate Show is brought to you by CCIM Institute, commercial real estate's global standard for professional achievement. Visit ccim.com/CRE show. That's ccim.com/CRE show. Welcome back. You're listening or watching the Commercial Real Estate Show. I'm your host, Michael Bull. Today we're talking about apartments with Sharon Hatfield. She's president of CFLane, and they own and manage a lot of properties around the country. And Sharon, I'd like to ask you about rising construction costs. What do you see for trends there, and how's it impacting your industry?
Yeah, absolutely. So they're definitely trending up. I would say that hard costs for construction have continued to trend up close to 1% per month that we've been noticing, and they have been for the last 3 years. And land prices obviously are on the rise as well. And aside from all of that, just labor costs in general are going up. But also, we've noticed that subcontractors are spread thin among projects. So we've noticed that it's been really hard to keep subcontractors on a deal. And I would say the impact that's had, we've seen it, we felt it, as a lot of my cohorts have in the industry. These rising costs have really required us as developers to design more expensive, higher density projects, and they just keep getting higher. So eventually the construction costs and land prices, we think, will probably slow down the development pipeline significantly, which is probably happening already in some submarkets. It's difficult, we find, to get a lot of deals capitalized right now, and some of the banks have tightened up on the lending. So it's, for the most part, only the best of the best borrowers who are those with lower leverages are seemingly getting the deals done, which, I guess is good for some. It's going to tighten the supply, but it's also hard for those of us who want to continue to build more as well.
Right. Yeah, that's a good point. So if it limits supply because of rising construction costs, well, then your existing properties may have higher rent increases, more tenant demand, and more value from investors. So does that mean that you guys are still developers? Are you buyers? Are you sellers? Or are you all above in this market?
Well, a little bit all above, but I would say more than anything right now, it is a hot market to sell.
Right.
So buying is extremely difficult, so you'll see us probably being more of a seller than anything else. And we're still doing some developing, too.
Yeah, are there certain cities around the country right now that interest you guys more than others to develop or invest in?
I'm sorry, what was that?
Are there cities around the U.S. that interest you more to invest in or develop in these days?
Yeah, absolutely. We tend to stay in the Sun Belt. So I would say from a development standpoint, we still look at the Southeast, with that being Alabama and Florida, Carolinas and Tennessee, Georgia. And then as far as acquisitions, we really are staying in all those areas and expanding beyond. We do have some stuff up toward Michigan and then expanding all the way out to Texas, which is probably our second largest market. So those are two other areas that we're focusing on.
Okay. And as you guys study the market, Sharon, and I'm sure you guys sit around and think about this and plan with your numbers and what you're doing moving forward, how do you feel about the impact of rising interest rates on your market? Because on one side you have the investment market and the values and the cap rates of deciding when to build and buy, and then the other side you have how rising impacts could impact occupancy and tenants, moving out and buying a home or not. So that must be an interesting discussion around your boardroom.
It is indeed. And, I don't think that on the short term we feel like interest rates are going to impact the cap rates. There's really too much capital right now, both domestic and foreign for that matter, searching for yield. So, foreign investors are paying negative interest rates. So any real estate at this point looks good comparatively.
Right. That's right. And what about for tenants moving out? I mean, when you guys do your exit surveys, when tenants move out, how many of them are buying?
A good bit. I would say less than obviously I would answer that question 6-7 years ago. The trend tends to be that those who are in the garden apartments in the suburbs are usually the ones building and buying homes and moving out. And those who are in the urban core fill developments and more in the city, most of the move-outs are occurring because of job relocations and not so much for home purchasing.
Okay. And how do you guys feel about affordability? You mentioned rising costs for construction and land costs, and that is really driving up the prices of these new communities and driving up the rental rates. So how do you feel about affordability of the tenants being able to pay these rents in some of these markets?
Yeah, it's definitely tough for some. I think probably since I've been in the industry for about 20 years, dating myself there, we are watching people probably extend their limit the most I've ever seen. So the percent of their income ratio is at the highest it's been. So I do think that's affecting affordability. I think it is going to become a problem as even, older units now are pushing rent. So we'll continue to watch that. I think at some point it's going to stabilize, but right now people are definitely stretching themselves pretty thin.
Okay, we're close to the end of the segment here, but you mentioned foreign investors. They're out there competing for apartment products. You think the changes in the FIRPTA tax laws will maybe increase the demand from foreign investors?
Probably not too much. We haven't been really talking about that or measuring it. I think most of what we're seeing is still within, the effects that it's having with just our internal folks in the U.S. So I really couldn't comment on that.
Yeah. Okay. Well, final word for our listeners about apartments. Should they still buy apartments? Is it good space? Do you like the sector? Is it still a good time to invest in apartments?
Oh, I'm sorry, I didn't hear you.
Is it still a good time to invest in apartments right now in this cycle?
Oh, absolutely, yes. It's certainly a wave, but it is still trending upwards. We haven't hit the plateau yet, so it's not too late. If you're looking to develop, you might be missing the train, but from an investment standpoint, it's hot.
Yeah, I agree. I think it's still a good time to buy apartments, especially with the performance that you guys are seeing. Sharon, thanks for joining us on the show today.
My pleasure. Thank you.
All right, well, stay tuned. We'll have more on apartments right after this message. I'm Michael Bull. This is the Commercial Real Estate Show. The Commercial Real Estate Show is brought to you by Bull